All right. Welcome to Skai's Q2 2026 quarterly trends report. We've been doing these now for 16 years, every quarter, bringing you the best of benchmarks across our client base, helping you understand the market better, maybe benchmark against your own activity, see where you're standing. That sometimes you'll be ahead of the curve, sometimes behind the curve. And as you know, numbers are just numbers. It's the context that you put behind them that makes sense. As I think about what's going on these days, all this change. I've been in this since 2002. I started in paid search in 2002, and so much change. I mean, I went through the recession last and the rise of everything, the launch of social and retail media, and then COVID. And I have never seen so much change than I have in the last couple years. That's, of course, because of AI and the agentic revolution and era. And there's two things I want to just say before we get started. So the first one is statistically, things are looking great. Y'all are doing a great job out there. As you'll see from the numbers are up, the numbers are looking great. I don't know if that's because of AI or because everyone's got their nose to the grind, but well done, everyone in the industry. And so that's a good thing to know. The very positive results we'll see here. And then second thing is in the 70s, there was it's actually turned out to be wrong, but at the time there was a quote that was floating around the business world that in Japanese, the same word for crisis is opportunity. Now that proved to be wrong. However, I still like the sentiment. And that's what hope everyone out there who might be feeling the grind and feeling the change and feeling the stress of what's going on right now and the ambiguity. But just know that when the market shifts, some people zig and some people zag. And if you zig with the market, you can really find some tremendous gains. And I hope all of you are looking at this opportunity that presents itself rather than the crisis. All right, let's get into the stuff here. First of all, you know Zoom. I don't have to tell you too much about it. If you have any issues, just go ahead and try going out and come back in. Sometimes there's audio issues. If you need to, there's a Q&A button. My colleague Dasha is monitoring. So if you do have any problems, go ahead there. The one question that we constantly get is, are we going to get a copy of these slides? Yes, you will get a link to the slides, and you also get a link to the report that we always generate along with the quarterly trends. So just wait for that. That'll be coming out in the next few days. And like I said, anyone who signed up for this email, you get a link to this, you get a link to the recording, and you get a link to the report. My name is Josh Dreller. I'm the Senior Director of Product Marketing here at Skai. Welcome. And I'd like to introduce our guest today, Nate. Welcome to the QTR.
Thank you for having me. My name is Nate Hammond. I'm a director of commerce media at Mindgruve. We're kind of an everything agency, but like my little vertical is commerce. And yeah, I've been with the agency for 4 years, find the space to be super interesting and as you called out, kind of constantly changing, which is why it's fun. I've got a kind of cool dual role where I'm like hands on keyboard in some accounts while still getting kind of a big picture view of trends and how different marketplaces are trending. So super excited to be here.
Great, thank you. And doing some prep with Nate recently. He's got a lot of great things to share, a lot of great stuff that you will find, some tips, some recommendations, so on. If you like this research, you like our quarterly trends, you can find our previous quarterly trends on our research center. Also, our annual State of Retail Media Report that so many people like, and a lot of other things, including our very new State of Agentic Readiness and Media Teams report, which I think I'm going to go into a little bit today to explain. But you'll be able to get the full report from our website as well. Actually, do the same readiness survey to see and benchmark your own agentic readiness, which is kind of cool. All right, today we're going to be talking about Q2 26 across commerce media, which is retail media, search, and social. We'll be doing, as we always do, our deep dive into retail media results and talk about paid search and social. Then we'll go into our AI section that we've been doing now for a couple of years. We're going to talk about agentic commerce era and agentic, what's happening with agentic. And then finally, of course, looking ahead, some action items from Q3 that we're already in, and also looking ahead to Q4 because that's, of course, on everyone's mind. Before we get started, just so you know that this series, this data, unless noted, all of the analysis within this quarterly trends is based on nearly 1 trillion impressions, 10 billion clicks, and over $10 billion in spending over the last 5 quarters. Only client accounts that have been with us for the full 15 months of analysis are included here. So when you do see anything, just know it's same store sales, same store growth, and so regular market fluctuations will apply, but client fluctuations going in and out won't. All right, let's jump into our quarterly trends. Real quick, before we get started into the numbers, let's look at some maybe news and notes that shaped Q2 and ahead. First of all, report that Amazon ad revenue is pacing at 2x their retail business. Doesn't mean that it's bigger than the retail business. It's not. But the fact is it's pacing. Nate, I mean, you're into this stuff. You're in this stuff all the time. I mean, what could make that accelerate faster? What could slow it down?
Yeah, I think Amazon is really pointed towards being an ads platform over a products platform. I think that statistics is a great way to show it. I think they view themselves as kind of a Meta Google competitor more than a Walmart Target competitor. And I think as they continue to add placements, get more into CTV, that will just continue to go. And I think they're well positioned to sort of continue the growth.
Yeah, I just think, Netflix has what you've watched and how they can recommend, but Amazon, of course, has what you buy and has what you browse, and that can help them recommend shows and even develop shows. It must be interesting being over there. Walmart also going well with their ad revenue. Again, same question. What could speed Walmart's growth up, or what could slow it down?
Yeah, I think Walmart has done a good job of kind of focusing on what matters in terms of sort of the data needed for marketers to connect investment to outcomes. They're like clearly the number two, but they, for a lot of years, kind of lagged Amazon in terms of what data is provided and what signals you can take. And I think especially over the last like 6, 12 months, they've really dialed in on like how do we provide high quality data to marketers rather than just like providing a very high like ad ROAS number. Like what other data points can we fix? And I think what they've done to change ad attribution recently has been super helpful for me to sort of really connect investment to outcomes rather than just looking at ad attributed sales.
Yeah, feels like they've got the foot on the gas and they see the opportunity, and that's a lot of weight behind that initiative. We also have been seeing a lot of disruption in the agency world, especially at the holding company level. There's a bunch of things. Just go ahead and search those, but it's certainly evolving more so. I used to work at Omnicom, and once again, a lot of shakeup going on in that space. Meta also doing really well, especially since COVID. There's the prices spiked during COVID, then came back down to a reasonable amount. Um, what does Meta offer, Nate? What does Meta offer to advertisers that say Google doesn't?
Yeah, I think this is very downstream of kind of the AI LLM revolution here, where Google requires intent. It requires you to like take the action of searching, whereas Meta provides you an audience that is just kind of there scrolling, and you can kind of reach people in a non-traditional part of the customer journey and really sort of plant seeds that you can harvest later in a way that because Google is so intent focused you can't really reach people kind of before they're searching, which Meta can and kind of exclusively can in terms of breadth of social reach.
Yeah, I mean the volume there is tremendous. The targeting is incredible, and like you said, searches are only growing on Google. And search engines are only growing at a certain rate year over year. I mean, as the population expands, people are searching there. They also have other places to search these days, whereas social is really has a firm hold, like you said, on the mid and upper funnel, and then as well as the bottom. Google ad revenue, as we said, is still climbing. And AI mode passes 1 billion users. So they really have a tremendous audience, and they reacted very well, I think, to, when ChatGPT popped out, and Google looked like for the first 6 months, we're having about a year, we're, kind of finding their way, but they certainly have leaned into it. And then, of course, OpenAI opened ChatGPT ads this last quarter, which you can get through Skai. So a lot of stuff happening. Let's jump into the numbers. So real quick, before we start getting into these index charts, let me just tell you how to read them. So the first period, it will be 2019 Q1, you'll see as we get into it, will be normalized to one. It doesn't mean these two things are the same. Let's say this was clicks and this is spend. It just means we're normalizing to one so that as you look at the quarters as we go through the long-term trends, you'll see them grow. Now, you could just really look at the blue bar by itself, and you could just look at the gold bar by itself. But when you look at them together, you can kind of see which one's growing faster than the other. So that's how we should read those going forward. So let's look first at retail media. I mean, when you look at the slope, it's easy to read. From 2019 Q1, we're talking 7 years, just up, up, up. We're at 10x spend. Clicks are big. I mean, Nate, tell me about inventory. How's retail media going to keep up this tremendous growth? I mean, what are they going to keep this trajectory going? What are they going to have to do with inventory?
And it's just increasing the supply of inventory, the type of placements, and the amount of placements. The kind of recent example that I think is telling is the sponsored product video on Amazon, which is like it's not even its own ad type. You're just attaching videos to existing campaigns, but you're providing the shopper with an experience that doesn't feel super adsy. You're getting a feature video that you can click through, but it's another placement that you're paying per click, and the clicks tend to be more expensive than traditional sponsored product. So that kind of reinforces that it's reaching the shoppers as they shop in new ways that aren't just feeling like you're getting ads constantly.
Well, as long as they can keep filling the auction with more inventory, they can keep the efficiency that all retail media marketers are enjoying. So let's hope they keep that up. And when you look at costs, this is incredible to me because tracking digital advertising, looking at the search trajectory early on, then the social ads trajectory. I mean, as an ads auction gets saturated, costs just tend to go up. And here we are, 7 years in, 10x spend where we were in 2019. And look, all the costs have kind of stayed within this narrow band. What's keeping these prices so stable, Nate?
So the placements and inventory increasing over time is a huge component of this. I also think retailers are in an interesting position where they get paid on the click and the conversion. And so it is important to them to be providing quality placements on search pages and then quality products on the detail pages. And so, it's not just the bid winning out. You can't just, have the highest bid possible on a query that doesn't match. The product matters too, and sort of the click-through rate matters too. And I think that helps kind of focus everyone with good incentives about what to surface for individual searches and then on product detail pages.
It's just amazing when you look at it. And when I'm gonna skip to search, of course, continues just to grow year over year, but let's jump to the costs on there. And if we look at it compared to, retail media where you see this narrow band between, 90 cents and $1.10. Look at what's happened with search. We've started tracking this end of last year, just has completely pushed up for six, even during COVID, barely spiked. And now we're seeing nearly almost double what the costs are in aggregate across our clients. And we know what's causing this. And I saw this in my email, love eMarketer. I saw this in my email this morning and added it to this chart. And this was a study done by Seer and Active to show that when AI overview appears on a page, shows the click-through rate dropping tremendously. I mean, when it's not on the page, it's somewhere between 12% when it's on the page. Paid search click-through rates drop to 6%, and organic search as well is taking that hit when AI summaries. We were talking about this in the prep about zero-click search. We saw this just 5-6 years ago as Google started to really change the SERP to be more of a destination rather than just a search results page, that we saw clicks start to drop. And this is a tremendous shift, and Google knows what it's doing. So it's going to be interesting to see how this will play out. But I mean, tell me what you think. I mean, organic search has been such an important part of everyone's marketing, all these years, as well as paid search, of course. But just how do you see this playing out with AI overviews and where Google's going?
Yeah, I think the especially when we're thinking about it, the actual information that the AI is drawing from becomes super important in a way that you can't just brute force in the same way as you SEO'd, the way you GEO. I think you have to be a lot more intentional and kind of have your finger on the pulse of what people are looking for, so that you do get surfaced in those AI results and people are at least aware of you to maybe not click through you there, but to be in their mind and to find you in the future, whether through a traditional search or through LLM search.
And as you can imagine, as click-through rates drop and as paid search marketers are watching their accounts and they're not seeing the volume that they need, they're not getting the clicks they need. One of those levers to pull is CPC to try to get up higher, play the ad rank game, get up higher on the page than normal. And so that's probably really what we're seeing here. Probably still tremendous value. There's a bit of a bubble, I think, at the low cost clicks, but I'm sure there's a lot of paid search marketers listening to this, watching this now that are just not so happy about this. I wonder what all of you are seeing. Have you been able to kind of keep your let me go back here. Are you been able to keep your CPCs down? Of course, this is an aggregate across all Skai clients, brand, non-brand, et cetera, et cetera. But just directionally, as you can see, a tremendous shift that you know since 2024 um, and onward. All right, paid social, as we saw, doing really well. Meta is going to pass Google for the first time ever in terms of ad revenue this year. Of course, all socials, not just Meta, but they're the 800-pound gorilla. They're the big one that's moving these numbers here. We talked a little about this earlier, but social and driving the ability, to drive from Meta to a retailer, which is a fairly recent, 2018 or 2019 fairly recent event in the history of social advertising. How has that changed, and how do you use and guide your clients in terms of using social? You called it Meta to Amazon, the channel.
Yeah, and I think the kind of unlock that we're currently still like shifting through and trying to figure out is that so much of what we do on platform with the retailers, we worry about incrementality and cannibalization. Would this person have purchased anyway by spending money on them? We don't see that in Meta much at all. It seems super incremental, very additive to the mix, and kind of fits into sort of a prospecting level of the customer journey in a way that has been very positive initially, both for like just increasing traffic to a listing for low costs, as well as retargeting efforts getting more effective as you increase that traffic to the listing. So I definitely see it in the future as a big part of the mix, even going to the retailer over a .com because of that, the lower cost and then the value of retargeting in the future.
Yeah, I think that we were talking about, I think in our prep, I called it ear tagging, like when you tranquilize a bear in the woods and you put a tag on him. I mean, just the value of driving people to Amazon and now, to your PDPs, and now you can retarget them. So even just that cost. And you were even saying that if the cost to acquire, you were saying something, if the cost to cookie someone is low, that means you can do more retargeting. You said something about that.
Yeah, where it costs some amount of money to get someone to a PDP through traditional kind of Amazon ads ecosystem. Meta is so much cheaper that the quality can be worse because you're able to get more people to that listing and then retarget that pool in a way where it kind of nets out in the end because that initial upfront getting them into your pool of retargeting is just so much cheaper than it is on Google search or on platform with the retailers. So it's an interesting way to really supercharge growth because you are able to just, take a listing and increase the traffic by 30%, 40%, and then increase your retargeting ROI by, in some cases like 100%, 150%. So yeah, like I see it as very important to the mix going forward. For that reason, it's just a much cheaper way to get people to your listings.
And I just, to the people here, for the social advertisers or the commerce marketers that are driving social to Amazon or to other retailers, I just wonder, how are you doing that? What are you do? How are you testing? Should I send it to my .com? Should I send it to the retailer? Which retailer? Which ASINs? Which products? Which ads? Just be interesting. There's probably a really complex web of to really make this thing efficient. That you could must need incrementality tracking and Amazon attribution and all sorts of things and AMC to really understand how that works. But I can imagine if you can do that unlock, like you said, that understanding that it's just even the value of sending someone to retarget, even if they don't purchase on that particular visit, might have some value to marketers. I wonder how all of you measure that and take advantage of it. And then when we look at costs, like I said, it spiked over COVID. It was one of the only games in town, of course, during that time. We were a little worried here. Was this going to happen? Can the social advertising economy handle these costs? But then, of course, like we said, we dropped down, and it's kind of been staying put where it's been now for a couple of years. All right, let's dive into retail media. This is, what Nate, his eyes light up. He's all about retail media, so we're going to get some really good color commentary from our guest today. Right off the top, 26% year over year growth quarter over quarter from Q2 2025. Still in that middle to 20% range, which is, I mean, since we've been doing this, it's been in that middle to 20% range or even in the low 30s. So I keep wondering when that rocket is going to run out of fuel, but it doesn't seem to be. The great thing is 27% also in clicks. So and an 18% up click-through rate. And let's look at from a high level here. I mean, the thing that jumps off the page, obviously, Nate, is the CPC at 0%, which I'm still just blown away with this, watching this thing. I'm not a retail media marketer myself, but just being able to see the efficiency that all of you have been able to keep. I hope a lot of you are seeing that same thing on your end. So spend, clicks, and then of course impressions. And the fact that impressions aren't growing with spend and clicks means you're getting even that's that click-through rate. That's what's you're even getting more people interested in your ads. So here we are, 10 years into this channel, or maybe even a little bit more, and you just look at this right here, it tells everything. Just continue on with the efficiency. As we look at the month over month growth, these are all year over year from the previous year's month. You can see that, we had a plus 23%, plus 17% in May, and of course, June. What happened in June, Nate? What was the big thing that drove spending?
Prime Day being moved into June in the first half of the year for the first time.
I wonder if that's a business something to get on the books for Q2. Yeah, I wonder why the decision to move it earlier. And I've always wondered why they wait to the last minute, maybe to create interest and everything, to announce the dates, which is hard for marketers to start to really figure out. But still,
Yep.
still, yeah. I mean, tell us about that. I mean, what happens? I mean, you're probably checking every day, right?
Yeah, so like the we get signals about it in terms of like when deals open up. And the we did get some amount of communication from Amazon that was like, hey, expected earlier. We're actually getting the same indications about October Prime that it might fall into September. But yeah, I do think it was a move to move this tentpole into the first half of the year, knowing that you have October Prime and Black Friday, Cyber Monday at the second half of the year. I will say it was a pain point for us because generally you're planning your years out month to month, and the idea that you had to pull forward spend to be able to fully support the event was a pain. But I do think it somewhat makes sense for having a big tentpole event in the first half of the year, knowing that you've got that Q4 spike as well, and kind of trying to spread it out as much as possible.
And we have a Prime Day section coming up. So let me go and speed up a little bit here. This is Core Trends. Once again, you will be getting the report link and the slides link, so you can go through this. So here's your quarter over quarter and year over year. Pretty much falls in line with what we've been looking at. A little drop in quarterly click-through rate efficiency, but that makes sense because of Prime. I would imagine there's more competition and higher bids, so nothing to see there. In terms of ROAS, so this is always a weird slide for me, as I was explaining to Nate the other day, because of course in aggregate, not all of you are going to see a $6 or whatever ROAS, but directionally, it's kind of an interesting chart to look at quarter over quarter, which is why we include it here. This is of course year over year, or by quarter ROAS. So just think about our entire system, all of the client accounts that are on Skai. And so just directionally to see that we're still in that narrow band of that, 590. Of course, it's going to spike in Q4. It always does. I probably need to extend this chart so we can see that kind of lift and everything. But just seeing that efficiency, and is that what you're seeing? Not necessarily the number, and I don't want anyone to look at the number itself, but just are you still seeing that efficiency, that ROAS efficiency, or whatever measure of return that you're looking at kind of stay stable over quarter over quarter?
Yeah, definitely. Especially the difference between ad ROAS and like ROI TROAS here is important. But I think the ROAS metric we've seen with the more tools that you have to target a really, really precise customer, like AMC audiences on Amazon is the obvious example, but there's some cool stuff you can do through DSS on WMC, and then you've got, traditional like placement modifiers. All of that helps you just make sure you are staying very efficient. And it also helps to have all of that inventory that continues to grow, that sort of helps make a customer who used to be organic now is a paid, and that tends to convert better. So I think it's a combination of factors. A lot of it's inventory, but definitely something that we're seeing where ad ROAS does kind of hold steady as placements increase and other challenges exist. Like ROAS doesn't seem to be a huge issue.
Yeah, and whatever your return is, like you said, there's different metrics, and especially in retail media marketing where you understand profit margin and all the different things. But hopefully, you all are seeing a bit of a stable return, if not up. But it's just interesting to see as spend spikes and all these things stay very efficient. Retail media is just a really knockout channel. We look at the different retailers. We do just kind of get Amazon, Walmart, and the other buckets. Sometimes the other buckets pacing higher in spend, like it did in Q2. That's good to see. That's interesting to see. But they still have a lot of ways to go. You got Amazon in one, like you said, Walmart, right, behind them somewhat. But what are these others? Like, why hasn't this taken off? You have hundreds of retail networks out there that are, not really doing what we thought what they would do 3 or 4 years ago, which was really create a retail media portfolio. It really is Amazon, Walmart, and the others. What do these other networks need to do, Nate, to make a dent in Amazon and Walmart's market share?
So I think it comes down to like two options. You can integrate with Amazon. That's kind of what Macy's did, where you can buy Macy's ads through Amazon, or you can innovate and have something new. I think what gets left behind on these RMNs are the people who are just providing what Amazon provided 5 years ago. Like that is not enticing to marketers. But like something, a specific example I have is like Chewy has a kind of a new idea for what a sponsored product campaign is, where you're bidding at the item level, but then you're multiplying at the keyword level rather than bidding at the keyword level. That's interesting, and it's also understandable to people who are using Amazon and Walmart. So I think either you integrate with these existing channels that are big and dominant, or you innovate and provide some sort of different level of value to sort of steal some of the attention. But what doesn't work is to just like be where Amazon was in 2018 and pretend that you're going to eat into share that way.
And I would imagine, as marketers are looking across their portfolio approach and they're saying, I would retail media network this, retail media, it might be interesting, but the cost to manage it, and not just the time, the effort, every time I pull a report, I got to make sure I pull it from there and put that cell into the Excel or the Google Sheet. But with agentic workflows coming through, I would imagine maybe that could open up more people using some of these other networks if it's not so hard or take as much time to manage, measure, optimize, etc. So who knows? Maybe the future is bright for these companies. Spending across format, you can see here, of course, DSP is a big story. As you look at the CPCs, we started tracking this last year, where DSP actually became a lower cost than sponsored products, which is interesting because it really opens up, the ability to do, to not just limit yourself to say, search triggered ads, but to other things. What about video ads? You mentioned them earlier. Like, how could like this influx of video ads into the inventory impact costs?
So I think there's kind of two ways that we see it happening, which is that like the OLV offering in traditional programmatic display on Amazon specifically is really good at driving clicks. And it drives clicks for really low CPCs in a way that you can show results from your DSP effort. And then you can layer on some of the more upper funnel STV, CTV stuff and have that stuff work together to sort of net out into a positive sort of upper funnel experience. Because there's no barrier to entry with video anymore. So to make sure that you're there in both levels and then balancing those two things where the OLV clicks are not the highest of quality because they are largely like gaming app inventory. But if you use frequency caps and you stay on top of that, you can then justify an STV effort that's not going to be as efficient by any sort of traditional ROAS metrics, but will then help support your branded lift and your overall awareness and getting in front of new people in new places. So I definitely think those two things working together is a good way to balance this out and sort of leverage those lower OLV CPCs into a more robust sort of off-platform effort.
And hey, sight, sound, motion is a great way to impact and influence consumers to buy and purchase. And again, not to sound like a broken record here, but with the influx of AI and agentic tools to be able to build videos faster and take existing videos and make them change out things so that you can take, maybe produce one thing and make 1,000 highly granular, put something else. I'm just thinking, someone is holding something, they could be holding any product, if you run it through AI. So I would imagine the golden age is coming up with online video ads. And of course, Amazon's right at the front of all this stuff. Speaking of Amazon, so we're going to our Amazon section here. You'll start seeing some of the same. Of course, it's because they're such a big player in the market. Some of their metrics look very close to what we're seeing. I mean, is there anything that you're seeing here, Nate, that just, this efficiency, this mind blowing, that is a surprise? Or, what do you think some of the big drivers are that we haven't talked about?
So I think it's something we've mentioned a bunch. This increase in overall inventory, I think, is a big driver here. And something that we see as a pain point is often organically listings are hard to find because there is so many more paid placements on platform. And so as those people who used to be organic then find themselves using ads to reach listings, they come into this data and they're going to convert better. They're going to be more interested. They're high intent. So it helps kind of keep CPCs down and keep click-through rate and conversion rate up because you are reaching people who are, very intentional, but the nature of the platforms is they need a paid click or two to actually reach the listing. So I think that's a big metric, and that just goes along with the theme of this, which is like more placements, more inventory, and new places to new people.
And it goes without saying that the ads on Amazon look like regular Amazon listings. We've done studies. We haven't done one this year, but even last year we did a study of 1,000 consumers, and something like 50% of them said they hadn't seen an ad on Amazon in the last 3 months. Which, of course, every time you search the whole thing, it's so it just speaks to just the platform, the native seamless advertising, things that are just basic to retail media. But Amazon has really leaned into it, and it's just a great platform for advertising. Like you said, they're really focusing on that.
And done a
Um,
good job of hiding the ads. Like that is a genuine impressive thing they've done is to convince people when they click on an ad, they're not clicking on an ad.
that's right. We'll fly through the, like I said, some of their stuff, some of their numbers really reflect the category. Walmart spending is up on sponsored brands and sponsored products. We're seeing more people adopt sponsored brands. Such a great ad type, and that's becoming more efficient as well. And then CPCs falling, and as we look at compare the sponsored brands versus sponsored products, they're getting closer and closer. Which they're not there yet, but just when you have various ad formats that are about the same price, it just gives you so much flexibility. You're not kind of hampered by, well, that's a little bit more expensive. So I could see more marketers adopting in the future. And then we have our retail media charts here by industry. You can see spend across the vertical axis and CPC year over year CPC. I'll let you guys, when you get these slides, look through these because they take a little bit more than a few seconds to check out. All right, let's dive into Prime Day. As we're a little bit behind, so I'm going to fly through these. But as you see, biggest Prime Day ever, as my colleague Dan says, we can say that every year, so it's not a shock, but it's nice to say. I hope that doesn't happen one day where it wasn't bigger than the year before. But just and then day one was the biggest ecom day of 2026 so far, and so it continues to be a big deal outside of Q4. But let's look at the takeaways here. So the efficiency was really from the blended CTR of the various ad types and formats. What we saw a relatively flat across our client base. In terms of spending. It was just up around 1%, which tells me that they just did more with it because they generated more return. But you're a true commerce shop. Mindgroove's a true commerce shop, and what did you see on your side?
So we saw more than that. So the number we have is like a 15% growth in spend. A lot of that is because that's kind of what we're recommending as well. Take advantage of the event. And because, as we talked about, it moved into the first half of the year, it was a great opportunity to close a gap between your forecast and your actual sales. So I think that was a priority for a lot of our brands as well, is fully investing in the event to get as close to where they needed to be halfway through the year as they could.
Gotcha. Yeah, that's another good reason to put it in June, right? There's a lot of brands that are in the middle of their fiscal year, or even at the end of their fiscal year in the summer. I hadn't even thought about that, so that makes a lot of sense. And when you say 15%, was that for the event itself, or did that include the entire, like the ramp up to it, the post, just the 4 days of the event?
Yeah, 4 days versus 4 days.
Okay. Again, speaking of the 4 days, so last year kind of caught people off guard. They weren't really sure how to spend. We saw, of course, front loading, massive front loading last year, and then people kind of, ran out of budget towards the end of the event, not realizing there were some pretty awesome opportunities for those that kind of paced correctly. This year, marketers learned they paced down. It wasn't, and they just made sure that they kind of went a little bit more evenly. Um, you know how did your clients approach, and what was your guidance to them about how to handle a 4 day event like this?
Yeah, and it was like last year flying in blind, not knowing what this would look at. You always know the first day is better than the second day. But what we found in 2025 was that the first day is best and the fourth day is second best with kind of a lull in the middle. So to make sure that you are having enough budget to fully support that fourth day, because the CPCs are cheaper on the fourth day too. It gets very competitive on day one. And so it is kind of a better way to get more out of your investment dollars by having a focus on that fourth day when you know demand's going to spike again. And you also have all the AMC audience tools to make sure if someone added somebody to the cart, let's make sure they convert before the end of the event. That kind of stuff, very important as well.
How many days you think they could push Prime Day, Nate?
I think four is a max. I
Okay.
wouldn't be surprised if they shrunk it, to be honest.
Interesting. Yeah.
Because the middle 2 days are just they're a lull. I think feel like people the 2 day thing is kind of what we see.
I'm thinking all of June next year, but that's just me.
Turkey 45 at the end of the year.
DSP, huge, has been a huge story for the last year and a half. And I mean, during Prime, I bet that was a real focus for marketers going into Prime Day to make sure that they had, their DSP set. All right. And then and our last takeaway here, we at Sky, we have been benchmarking the pre-event baseline. So the 30 days leading up to Prime Day, we've been looking at that because we imagine, marketers start to ramp up, starting to build those cookie pools or trying to get in front of people's front of deals in front of the event, trying to maybe get out of the way of some of the spiking costs. So what this chart is the event day each day against the 30-day pre-event baseline average. So what we're saying here is that the first Prime Day one, marketers spent 3x versus the daily average of the 30 days leading up to it. Uh, you just kind of said what your strategy is, first day and fourth day. I think that's interesting. No one said that to me yet. So I think that's a really awesome tip, a little insider tip for those of you that are here. But of course, one of the best things you can do with Prime Day is not just, the return of the event, but also kind of use it to gauge and maybe fine tune your Q4 plans. So just, as we look at what we can learn from Prime Day to as you're finalizing those Q4 plans right now, DSP obviously a big part. Um, Once again, start building up your cookie pools and your audiences on the ramp up so that when it comes to the event, you can really go hard on your targeting. You can we have the ramp up period, you have the event period, but also don't forget the post period. That's an important part of Prime Day as well as within Q4 when people have missed deals, and so they're going back and they're like, I really want to get this, or maybe they didn't get the gift they were hoping they were getting from their significant other or their parents or whoever, so now they're going to go buy it themselves, or they're returning things they got and they didn't like it as much and looking ways to spend that money. Of course, weighting your budget across the days, and day four, as we learned, is a really great day. keep everything going. And, look, there's sales all year round. While Prime Day are big spikes, of course, we know that ththings are happening every day. You can go on Amazon now and get pretty good deals. Uh, any other tips, Nate, for kind of putting the final touches on your Q4 plans that you can learn from your Prime Day experience?
I think these six are perfect. I think kind of a big picture one is make sure that you have plans where you've got targets in terms of traffic and CPCs and clicks, but then be flexible once you're in the event. Be monitoring hour by hour. The competitive insights page of Skai is great for this, where you can really see who's spending money on what day, and you can change your product targeting strategy on that, and really make sure that you are coming in with a plan, but not being married to the plan as things happen during the event.
Nate told me he had a coffee IV drip for 4 days. He didn't sleep for 4 days, and was watching the things. And I think that's tremendous. And any Mindgruve customer should know this is a very dedicated man. Did not sleep for 4 days. No, he didn't say that. All right, search and social. We're just going to touch on those. I want to really get to the agentic session. There's some really section. There's some really interesting stuff that you can learn about your own agentic readiness and AI, what's happening. So real quick, 17% year over year spend. This is a nice spike, one of the bigger spikes that we've seen in the last couple of years. So Q2 was bigger. That maybe part of that was the supporting Prime Day as well. When we look at the distribution across accounts in terms of spend, of course, some spend more, some spend less, but we have many different clients, not just retail clients. We have financial services that might have stayed out of the way of Prime Day, and some other categories. Month was pretty set, and of course, you can look at the charts later across industry. Performance Max is kind of looks like it's getting there, but really AI Max is the story. And if you can see here, June 2026 was the first time that AI Max spending eclipsed into double digits, or eclipsed single digits into double digits across Skai clients. So while many clients are adopting at least one instance of AI Max in over half of our accounts, the fact is the spending is still around 11, 12%. I think this is going to go bigger. The thing for me, being an old paid search guy, I think that Google really did the right thing here in turning AI Max into a bit of a match type, meaning Performance Max are separate campaigns. AI Max, as you know, you just enable on top of your existing campaign. So it's using your keywords, your ads as the basis for those things. And for those of you that are Sky clients, you have some good guardrails. You can make sure it doesn't send traffic to URLs you don't want to, or use terms you don't want to, or keep the headlines you don't want to. So finding that happy balance between letting AI kind of do its thing, but also the guardrails around it and governance, very key. And we're going to actually get into that into the AI section. Paid social, 26% year over year growth, huge. Just really coming into its own. I'm really impressed by it. TikTok continues to grow as part of this. We talked about Meta, but TikTok is a big part of this. And of course, by industry, you can look at those charts when we get them. All right. Agentic, getting into the agentic side. This chart from not from eMarketer, of course, eMarketer sources these things, but they asked commerce leaders, the people that did this survey, asked commerce leaders how they're planning to use Agentic in their campaigns and where they're going to invest. So this is US, UK, and German commerce marketers at the top. Agent-specific measurement diagnostics. I mean, measurement still is like the hardest thing to figure out. So they're going to throw AI at the problem. That makes a lot of sense. Other areas, paid AI visibility. So making sure that you can show up now as the search landscape is changing to include AI and LLMs. Data feeds integration, which I think is the really big untapped part of AI that we're going to start to see. We were talking yesterday, Nate, about commingling data that you've never done before. It was just so hard. You could do it, but now you can do it with a conversation, and you can look at your ad data in relationship to your other data, and even like stock market data, all sorts of cool things you can do now, and really see if you can find those correlations. And definitely AI use cases, creative generation, plan forecasting, workflow, et cetera, et cetera. One of the things that we're tracking here is the comfort in delegating to agents. That's something that we're the trust gap, we call it here, is a hard thing to overcome, especially for people if they've done it the same way and they're just really a little worried. But as long as it seems like And we asked this question in our State of Retail Media report this year. As long as you're willing to keep humans in the loop, as long as the tools that you're using allow you to set check-ins and checkpoints for humans to come and improve things, it seems like marketers are really embracing this stuff. Nate, what are some of the things Mindgroove are doing to, align to this agentic opportunity?
Yeah, I think the big idea that like the barrier to entry for video is gone, where you can just take a good image stack and make a video that you can put in multiple placements. That's a big unlock. A lot of our teams are using exactly what you're saying, like commingling data together, looking at how gas prices affect, the sales of this category over time, kind of, allowing a forecast to have a lot more inputs into it is a big one, and then just making sure that the data that is being compared is kind of showing up over time and also getting different layers of granularity where you can see it at the ASIN level, you can see it at the PDP level, you can see it at the product segment level or the category level. Whereas before you kind of had to choose one of those and then do your analysis. This allows for much more kind of robust looks at some of the complicated metrics, cost per new to brand, that kind of thing that is hard to calculate, but AI can scale it easily.
And I think that's one of the big opportunities in terms of, marketers have great guts. They have gut feelings on things and assumptions on things. But if it's going to take you 30 minutes to just check out an idea, sometimes you're just not going to do it. So the fact that we're going to shrink that down to a minute where marketers are going to be able to say, hey, I wonder if this, like you mentioned, gas prices, every consumer's that's like the one economic indicator that every consumer sees because as they drive down the road, they pass 20 different gas stations. They know if gas is going up or down. We know it has an impact on pricing. So the fact that you're, trying to figure out some correlation there makes a lot of sense. And I would imagine a lot of people listening to this, maybe you should go do that as well. On a Forrester report and the 4A's report, advertising agencies, as we know, AI is disrupting everything. We already talked a little bit about agencies, but look, all agencies are using it. Really focused on efficiency, in-house efficiency seems to be the area. But the thing that I thought that was interesting, called out by Forrester in this report, is that agencies are still stuck in the cost center mindset, meaning they say that it costs them to do business, but they're not figuring out ways to then sell those extra services or sell that extra efficiency or whatever that is, turn it in. So is it just a toolbox or is it something that can generate money? I won't ask you, Nate, to answer that for agencies, but certainly for agencies right now, the opportunity to not just redo what you're doing from a workflow perspective, but find ways to spend money. And one of the ways to tap into Agentic, and I actually, wasn't even going to talk about Skai's MCP, but Nate mentioned it because Mindgroove uses it a lot. But using our MCP now, you can take your agent, Claude, ChatGPT, Copilot, whoever, and then you can get into your own data that we house here at Skai. You can get your campaign data and look at it and check it out in ways that you've never been able to before. You can get into our reports MCP and pull all your data, and even get into our operations MCP and make some changes there. And we're growing these things. A lot of stuff you can do. Here's some use cases here. While you're reading that, Nate, tell me about, you actually told me about an interesting capability that you're doing with MCP, or a task that you had. And tell us about that.
Yeah, so it goes along with what you said before. Like, do I want to invest time in looking into this? And the ways the Sky MCP can work, I use Claude, can really just cut that in half in a way where like you're speaking in your dimension categories, you're speaking in like the underlying data, but you can say this change was made to the account on this date, compare these two time periods, what do you think happened? And it will give you a why, not just a what. And like the why you can then stress test yourself and go see, is that true? Is it prove it or disprove it? I find that to be a better sequence of analysis than like aggregating all of the data, trying to get to the what, and then trying to think of the why, versus I have a why. Let me go dig into what I know about the context of this brand or this product. Does this actually ring true? Once you dig in a little deeper. And so we've used it a ton for like, we turned on day parting on this day, what happened pre and post. We like focused on these keywords, what happened pre and post. And it gets you a quick quality answer based on real data from Sky that you can then add your own insights and your own context to. And I found it super helpful for that kind of standalone analysis about a small change and how it affected, larger scale metrics.
And it looks a bit complicated, but so easy. It's a very, very short setup, and then you can just talk to your data. That's what I think is so interesting about it. You can just ask those questions, those gut questions that you have, that if it took you an hour to like download and normalize and VLOOKUP and do all these things that you probably wouldn't. But if you have gut instincts about what might be happening, what could happen, and of course, look, every platform, including Gmail, is not going to be completely personalized for your use. You're going to have things about every platform that you wish you could do more things with. MCP allows you to do that with Skai. So you have the Skai and then you have the MCP. Don't mean to get too far into Skai, but stuff in this session. But Nate, you brought it up, so I thought we should share it with the group. And then I mentioned this report that we did on agentic readiness. We surveyed 332 paid media practitioners to figure out what their readiness state is for being built. I'm not going to go through everything today. You can download the report yourself. You can even take the readiness survey yourself and see where you benchmark across this. But across our maturity level, you had unprepared, exploring, building, operational, and agentic. Obviously, this level here is really starting to get into true agentic capabilities. So what did we learn? Out of the 300 plus paid media practitioners we surveyed, their mean readiness score, so just all the scores divided by the number of people, is 35.7. If you go back here, as you can see, that's not very far into the agentic maturity. And 80% of the people that we surveyed were under that building tier. And so really this is the place that people are getting stuck, it looks like. Nate, why are people getting stuck in the explore? What is it about going from the explore stage to the build stage that is such a big gap?
Part of it is it's a lot more fun to explore than to build. Like it's so cool to find new things and build new skills. And there is a big gap between having that and then starting to stress test it with different types of data, different types of accounts, bringing in stakeholders who didn't kind of nurture whatever that project was from the beginning and trying to get them to use it. They will find issues with it. And sometimes it's like we have to rethink how this works. But I do think the jump from level 2 to level 3 here is really where the value comes in, where you can have something that you can kind of apply and build and really make change, like make impact on the business. And it's really tempting to stay in the explore phase because there's just so much you can do, so much cool stuff. And as soon as you start opening it up, that's when you find the issues that need to be fixed to get into the level 3, level 4, level 5.
Yeah, no doubt. And then once you actually start building, that's when the real questions come up. Like, how are we going to do this? You got to talk to every team. You got to figure. So operationally, and as we look at the gaps and the challenges, it's interesting that the things that had the highest challenge are actually what agents need the most to get going. So it's a big gap. And you can even see one of the things that I thought was interesting from the report that I share here is that by seniority, you think you're more ready than you are. Your team doesn't think you're as ready as you think you are. But that makes a lot of sense. And of course, by industry, there's some differences here. Big report, beautiful report. You got to go get this report. And Dasha, let's put the link in the email as well, so that people can go right to this, so you can read the report. If you go to our website, if you go under resources, you'll see it pop up right there. Here's the webinar that we're in now. The Agentic. Thank you, Dash. Agentic readiness, where you can go here and you can actually not just download the report, but you can actually take the survey and see where you sit. Maybe come back to your group and say, hey, this is where we're at. This is some of the challenges we're having, and there's a lot of things you can do with that. And Skai can actually help you get to the next level. All right, based on this agentic information, let's just look into retail media. I mean, the interesting thing about retail media that sets itself out in terms of agentic readiness is it's really the one channel where your paid media data can actually go from click to buy. More so, it's the most measurable channel, I would say, although talking to Nate, I'm sure he would throw a lot of caveats into that. But as an outsider, it seems like, and so you need that real good measurement to feed agents what they should be doing, what's good, what's bad. They can know almost instantaneous or within, hours or days if things are working or not. Um, how do you see like campaign execution in retail media being aided by Agentic? Like, where are you guys starting?
No, I think that's exactly it. Where the benefit of retail media and these retailers is you have non-advertising signals, metrics that you can judge your advertising efforts on. And that's stuff like, sales rank, branded search volume, top line revenue, top line unit sales, as well as just share of voice. And being able to connect your investment to these things that aren't technically directly related to the investment can really provide a lot of signals about what's working, and the AI version of that is being able to do that for every level of business, ACE and PDP, segment, category, brand, in a way that is just really powerful and helps to guide your decision making, because you can pull a discrete complicated metric at any level you need to help inform your decision.
Amazing. Uh, um, Look, we're almost at time here, so I'm just going to get through this. Paid search already super automated, so it's going to lend itself well to agentic. And then with social, it's so creative and really is focused so much on the right brain, for so many years that that left brain, the signaling, the targeting, all that stuff will be, of course, aided by agentic. So we might see even a bigger, new age of social advertising as we get going. Key takeaways. So DSP is still Amazon DSP is really the stand opportunity in retail media. Social will outpace search this year. CPCs keep climbing, and that's probably due to AI search and shrinking the available clicks. And so people are going to be, paying more for those. Retail media still scaling. Not a up in CPC, actually up in click-through rate, and then Prime Day did really well. Coming up, we got Q4 planning that you're doing right now, of course. We got back to school, which is second biggest retail season of the year. For those of you that are in back to school mode, you know that. And then Labor Day, and of course, coming up to Q4. A few action items I'm going to skip now. You can see those when you get the deck, and then some planning tips. Uh, Finally, again, if you like this, you're going to get a link to the report at some point when that comes out in the next few days. It might actually be out. I'm not sure. And then we've got a lot of great research you can check out beyond just the QTR and our state of retail media and our Agentic Readiness Report. A lot of cool stuff. Just go to Skai. If you go to our Skai Research Center, just go to Skai, go to resources, and it can take you to that. All right. So we've come to the end of this. Nate, thank you so much for joining us. Great commentary. Loved having you, man. And have yourself a great Q3. Well, we're already in Q3. So have yourself a great Q3 and Q4 for the end of the year.
Thank you so much. It was a pleasure.
Thank you. All right. And you see a poll, please. Your feedback is very important to us. Cheers.